Again, the transaction is various equipment were purchased on account from Fortune for 55,000, July 15. What will you put on debit?
What's the question, sir?
What will you put on debit? Equipment, correct. What will you put on credit?
Accounts payable.
Correct. That is why you have 55. Yeah. That is why you have 55,000 added to the liabilities column. But take note, it's labeled as accounts payable, not loans payable, not notes. Do we know the difference between notes payable and accounts payable? We do notes payable when the liability is with an agreement to be paid of not less than 30 days. At least 30 days or more. Yeah, at least 30 days. If the payment goes beyond 30 days now, it's not just an ordinary payable. It's not just accounts payable. Most of the time, it will be accounted as notes payable. Then we have a withdrawal on July 18. Reyes made a cash withdrawal for personal use. The amount is 5,000. I think this is what confused you with the business finance journal entry. Personal funds, personal use. No. Because of that, you thought of including a journal entry. But look at the difference. In your business finance exam, what was placed there is personal funds were used for vacation. Nothing was said that the value, that the amount was taken from the company's account and that the amount be used for personal purposes. Nothing like that came out. All that said is personal funds were used for vacation purposes. In here, on July 18, we have there a withdrawal, which means that the company's account is involved. Value or amount was withdrawn from the company's account and it is for personal use. That's the difference. What is the effect of withdrawal to assets? Nathan.
Cash.
What is the effect of withdrawal to assets?
Cash, sir.
No, effect. Remember there are three. Increase, decrease, will not change.
Sir, decrease.
Correct. Withdrawals decrease cash. Decrease assets. Nicole, what will withdrawals do to liabilities?
Decrease.
Liabilities? Liabilities, they are not affected. Liabilities are not affected by
they are not affected
withdrawals. Correct. What about owner's equity, Nathan? How is it affected by withdrawals?
Decrease.
Again?
Decrease.
Correct. Owner's equity is decreased by the presence of withdrawals. And then let's go to July 20. The account due to Fortune was paid in cash. How much does Paulo Reyes owe Fortune? 55,000. What will this do? What will the July 20 transaction do to assets, Nathan?
What, sir?
What will this July 20 transaction do to assets? What is the effect?
Decrease.
Again?
Decrease.
Decrease, correct. Nicole, what will this July 20 transaction do to liabilities?
Did not change.
You look at July 20. Account due to Fortune was paid in cash.
Liabilities? Paid in cash.
What will happen to liabilities?
Decrease.
Decrease, correct. Nathan, what will happen to owner's equity?
Wala, sir.
Correct. Nothing shall happen. It will not affect. The payment of a liability will not affect owner's equity. The payment of a liability reduces assets and reduces liabilities. And so you have there the summary. If you look at this table, the summary of the transactions that had happened. Diba we did something like this in the Excel template that I sent you?
Yes.
Going to
Yes
page
po.
2, you'll find there the presence of revenue and expenses. So you have, by the way, what is the effect of revenue, Nathan? What can revenue do to assets?
Increase if
Correct.
on possibility.
Nicole, what can revenue do to owner's equity?
Increase.
Increase, correct. Nathan, what can revenue do to liabilities?
Wala, sir.
Nothing, correct. Let's go to expenses. Nicole, what can expenses do to assets?
Decrease.
Correct. Nathan, what can expenses do to liabilities?
Wala.
Nothing. You answered in English, Nathan.
Sir?
Nicole, you answer in English.
Nothing.
Yes.
Nicole, what can expenses do to owner's equity?
Decrease.
Decrease, correct. So always keep that in mind because that's what you can actually find in this area of your notes. Revenue and expenses are found here and their effects to assets and owner's equity can actually be seen. If you look at the module, the second page of module 1, nothing happens to the liabilities column. Because again, revenues and expenses do not affect liabilities. So you have there in your module as well some of the account titles like assets. Assets are grouped as current and non-current assets. Current assets are those that can be realized, collected, used up, or sold 1 year after the year-end date. Like cash, accounts receivable, inventory, prepaid expense. They have like a short terms duration. They can be realized or used up right away. Non-current assets are those that will take longer periods of time before they are actually realized or totally sold, collected, or used up. That's why you have here samples like plant, property, plant, and equipment. Because these assets do not get used up right away. Rather, they took time to get reduced in value. Their depreciation values are computed. Land, current, non-current. Land is an asset. Is it current or non-current? Nathan.
Non-current.
Non-current, correct. You have their samples of like long-term investments. For current assets, you have cash, money on, this is the money on hand. I'm on the third page now of the module. This is your money on hand or in banks. You have accounts receivable. These are amounts due from customers arising from credit sales or credit services. When customers owe you money, owe you some amount, you are to recognize a receivable. By the way, when we reach the point of hopefully we reach the discussion and adjustments, expect that we are going to allocate an allowance for value amounts that might not be collected. In accounting, we term that as allowance for doubtful accounts. We can't expect to receive 100% of the receivable right away. That is why we always recognize a portion which is not collectible. We term that as the allowance for doubtful accounts. Nathan, there is again your orange thing. I also have my Nathan, and it's colored yellow. So you have their other current assets like inventories, supplies, prepaid expenses, accrued income, and short-term investments. Liabilities. Liabilities can also be current or non-current. Current liabilities are those that fall due within 1 year after year-end date. So there's a period of time, a short period of time for it to be settled, like a year. Examples are accounts payable, utilities payable, and unearned income. Non-current liabilities are those that do not fall due within 1 year after year-end date. For instance, you have notes payable, loans payable, and mortgage payable. That's why when you go with loans in banks, they'll charge in interest rates because they recognize that the payment of these loans are not, or in any lending agency, the payment of these loans are not expected to just be settled in a year, especially when you talk of loans payables from banks. Then you have owner's equity, which is the residual and interest of the owner from the business. It is what remains when assets are deducted with liabilities, or when you deduct liabilities from assets. What comprise owner's equity? You have capital and withdrawals or drawing. At the end of the month or at the end of the accounting period, you'll also add to capital, to equity, whatever remains from the income statement. This now leads us to income and expenses. When you deal with income from selling items or merchandise, how would you term it? What's the term when you sell out items? Nathan. How do you call income when items are sold or merchandises are sold?
Well,
There's a term. Nicole, how do you call income coming from items being sold? It's on the third page.
service.
Service.
Items being sold.
Service revenue.
Items.
Selling of goods.
Yeah, when goods are sold, Nathan, how do you call the income? It's a short word.
Net income.
No, net income is different. It's in the incomes area on page 3.
Income.
Wait.
It's there.
Sales.
Sales, correct. You use the term sales if the nature, like in your case, Nicole, no? Diba you have a store?
Yes, sir.
If you are to make a journal entry of your income, you do not use service revenue. Rather, you use sales. Because the nature of your business is the selling of goods. But if it's the nature of if your business activity is the provision of professional service, we do service revenue or service income. That's the difference. In terms of activity, remember what are the types of businesses according to activities? Service, merchandising, and manufacturing. Service goes with service revenue, manufacturing, sales. Okay. And then we have expenses. The decrease in resources resulting from the operations of the business. They decrease equity in the accounting equation. So expenses like salaries expense, interest expense, utilities expense, advertising expense, miscellaneous expense. But mostly, or what's quite consistent would be the salaries expense because that's fixed and determined to be given out twice a month, at least twice a month. Questions? Questions?
Wala po.
Okay. Try to redeem your error with Lee Paulo Perez. You don't have a copy of the transactions of Lee Paulo Perez, no?
Wala.
I'll take a picture. I'll send it to our group chat. I've already sent the transaction in our group chat. Work only on Lee Paulo Perez. So for Lee Paulo Perez's transactions, Nicole, have you seen the transaction already?
Yes,
Nathan? So for that set of transactions, tell me what's the supposed value for assets, then liabilities plus owner's equity. Nathan, I've sent already the transaction. So I suggest you begin with the journal entries and then you proceed with the posting and then you do assets equals liabilities plus owner's equity. Tell me the value for assets and the value for liabilities plus owner's equity.